The purpose of this particular presentation is just to cover stable coins. I find that a lot of people talk about stable coins, assuming that everyone knows what they are, what they do, what people use them for. It's also the case that a lot of people talk about the future of blockchain as if it's happening in 2040. It's happening now as we speak. And so at the end of this presentation, I hope I convince you that to join the space and build with us. So at Kotani Pay, we focus on on-ramp, off-ramp. That means moving you from local currency to digital assets, or digital assets to local currency. We are mainly B2B, so we don't serve users, B2C users. We serve exchanges, wallets, DeFi platforms, etc. We started in Kenya. This was our groundbreaking market, and then grew to about seven countries after our raise. So what are stable coins? And there are quite a number of words there. So they're on-chain assets that are pegged to an underlying asset class. So what does that mean? You have an asset which is not on the blockchain, say for example the US dollar, that is held by an organization or a DAO, and then you tokenize it. You put it on chain so that anybody else in the world can use it. And we have fiat collateralized ones. So fiat is kawaida money. You have the USD stablecoins like USDT, USDC. You have commodity backed ones. So you can back a stablecoin with anything. You can back it even with gold, as Tether has done. You can back it with an algorithm, as Ethereum has done. Of course, that's more risky. The purpose of a stablecoin is just to maintain stability to the reference asset. So if the reference asset is Kenya shilling, I want to do a Kenya shilling stablecoin, my on-chain asset should have the same value, or at least be at parity with the Kenya shilling. If I want to do a US dollar stablecoin, then it needs to be at parity with the US dollar. And which ones exist today? So this is a map showing you stablecoin market share in 2025. You can see that 85% of the market is USDT and USDC. So those two stablecoins make up the lion's share of the market, and they're upcoming ones as well. So are people using stablecoins is a question. And what you see there, you have the blue bar, gray, green, and light blue bar. What you can see is Visa and Mastercard versus stablecoins in 2019. So you can see right here, in 2019, almost no one was using stablecoins. The use of stablecoins grows over time, and by 2024, stablecoins surpass Visa and Mastercard in terms of total payment volume processed. So we are talking about a global phenomenon. This is not a Kenyan phenomenon. It's a global phenomenon, and it's either we jump on board or we are left behind. When we come closer to home, this is a report that's released yearly by Chainalysis. It's called the Chainalysis Geography of Crypto. It looks at volumes processed by country, and it usually takes on-chain data and uses that on-chain data to determine how much volume has been processed by, across the various African countries. So of course, what you can see there is Nigeria is ground zero for stablecoin adoption, despite even the ban by the government. Last year, they processed $20 billion, and most of this is peer-to-peer between individuals. South Africa is $13 billion. That's where Kotani Pay is currently headquartered, because they have very clear regulation. So they have a very clear virtual asset service provider regulation. And so we decided to move our home from Kenya briefly to South Africa. Ghana does about 4 billion. Kenya does about 3 billion. And then it goes down all the way to even the poorest of countries, including Mozambique. So what are people using these things for? Oh, and this is the customer profile. So you can see how it's spread. You can see that 60% of the transactions are actually above $10,000. So that's about 1 million Kenya shillings. $10,000 to $1 million, that's 60% of the transactions. We have large retail between $1,000 to $10,000. We have small retail below $1,000, which is only at 12.6%. And then you have institutional. Institutional, think banks, think import-export, think commodity traders. Everyone is using stablecoins. And what are they using stablecoins for? So this was a presentation done by the CEO of Tether at Token 2049 Dubai this year. And he lists quite a number of use cases that they, as Tether, have seen. So they have all this data. They can see what people are using stablecoins for. Everything from saving, to holding dollars without a bank, to paying remote teams, to tipping creators online, to crowdfunding, accepting e-commerce, paying suppliers globally, trading crypto on exchanges, and so on and so forth. Of course, a lot of people focus on the illicit activities, but even if you read the Chainalysis Geography of Crypto report, that's about 1% to 4%. The rest of the use cases are quite legitimate. And these are the businesses that are serving the stablecoin market today globally. This was released by CB Insights, the 172 most dynamic companies globally. It's good to see African companies like Kotani Pay, Ivory Pay, Binance, and others. Binance is not an African company, but like you get my point. It's good to see brands that we are used to seeing here. So it's either you are doing enterprise B2B, that means you're serving import-exporters, commodity traders, etc., or you're offering on-ramp, off-ramp, as we do, or you're offering people liquidity. So you'll see their liquidity and yield. That is, if I save my stablecoins with you, you give me a small percentage. There are people doing money processing. There are people who are actually issuing the stablecoins. We have seen the two biggest ones are USDT and USDC, and so on and so forth. So it's a big industry. Over time, what has happened is the technology has evolved, and so people have specialized in various things. And so we call this today the stablecoin stack. The stablecoin stack has the blockchains which provide the movement of crypto around the world. So you can see down here, Ethereum, Base, Tron, Solana. These ones move and verify the stablecoins. If I'm a stablecoin issuer, I will often issue the stablecoin on an underlying blockchain. So for example, I can issue a Kenya shilling stablecoin if the regulations allow me on Base or Solana. And then there are people who will provide liquidity. The people who are just focused on liquidity. That is providing stablecoins, but wholesale. Think of them as wholesalers. Then you have the orchestrators and infrastructure. So that's people like Kotani Pay, people who then link these stablecoins to local payment channels. And finally, you have the applications. So there are quite a number of applications around paying gig workers globally, doing e-commerce, etc., that falls at the top of the stack. So we're basically presenting, this is a growing industry and it presents a lot of opportunities because all these different companies are employing people. It's a very great way for us to create employment here in Kenya. So for the opportunity landscape, this was mostly for people who are very new to the space and are wondering, how can I contribute to the space? You could start by focusing on the adoption or looking at it through the adoption lens. So look at early adopters. What is it that early adopters usually need? And maybe being an early adopter yourself, what are the experiences that you had? So early adopters tend to be newbies. They tend to require hand-holding. There's usually a long learning curve. The prerequisites for you to build such a product that will serve early adopters will be having a very familiar UI UX, that's user interface. Having good customer support and focusing on B2C. You can see that with exchanges, but you can also see it with wallets that have done this very well. So Phantom Wallet, for example, in the case of Solana, great UI UX. Strike in the case of Bitcoin, great UI UX. You have the medium experienced adopter. This is somebody who has been in crypto for 2 years. They have probably earned money, they have probably lost it. They know all these things, all the basics. So they're already familiar with the assets, they're familiar with the chains, they're familiar with onboarding, they just want to maximize yield, they want to make money. What you need to do there as a builder is ensure that you have interesting yield and saving products. You need to perhaps have utility functions, you need to be well regulated, and there are global comparatives for that. Then we have the late business adopters. These are people who have been in crypto since 20, God knows how long. They tend to have very large volumes because they own a lot of Bitcoin, Ethereum, etc., etc. They are mostly concerned about security, but they're also concerned about regulation. It's also the case that institutions will fall under this category. So if we're, for example, having a bank here in Kenya, they'll usually fall under this category. So if you're here, you're a banker, you're a person with experience at the central bank, at the KRA, etc., etc. If you have interest in the space, this is an interesting thing to look at. So the prerequisites will be that you'll have to provide the volumes by working with liquidity providers globally. You need to be licensed and regulated, and so on and so forth. The other way to look at it is through the professional services lens. Crypto, just like any other industry, needs professional services. So when we first met with the Chasing Mavericks team, they were mostly doing tech events, and we convinced them to start doing crypto events. This event this year is much bigger than last year's event in Karen, and I expect that next year will even be bigger, depending on the improvements that we make. So if you're good at marketing and events, try crypto. If you're good at legal, regulatory stuff, banking stuff, cybersecurity, tracking and tracing of crypto assets is becoming a bigger and bigger part of the market because of scams. So once I, for example, buy my Bitcoin and then it's stolen from me, how do I track and trace who stole it and where it is? You can also look at it through the market lens. So Africa trades in trading blocks. We are not one singular country. We're actually 8 trading blocks. Even in West Africa, Ghana, Nigeria, Sierra Leone, Benin, the Gambia are in one trading block that is different from the 2 Francophone trading blocks, right? You have the Portuguese-speaking countries like Mozambique, just from there. They're in a trading block with Cape Verde, Sao Tome, Brazil, and other Portuguese-speaking countries. They trade very little with anyone else, perhaps South Africa being the outstanding one there. So look at trading blocks, and usually the flows will follow those trading blocks, especially if you're interested in big business.